Hey everyone, welcome back to Iraqi Dinar Hub. Today we were taking a closer look at a topic that has been getting a lot of attention across the community. We were breaking down a series of reports and insider claims about supposed new internal 2025 policies at Chase Bank, connected to foreign currency exchanges. According to what's circulating, Chase may be adjusting the way its internal systems handle global currency events. When it comes to the Iraqi dinar specifically, the information implies that the bank is forming a more formal structure than what we've seen in the past, which is a noticeable shift compared to how most major banks have traditionally approached this topic. What we're discussing today, based on these reports, could matter for anyone following developments around the dinar. The claims talk about specific procedural changes inside the bank. This isn't just the usual vague chatter. These updates mention concrete adjustments in how Chase is said to be preparing. That includes new rules for exchange caps, changes to verification checks, and new requirements for booking appointments. Understanding these alleged policy details helps give a clearer picture of how big financial institutions might be positioning themselves for possible future currency developments and shows a move toward a more regulated setup. For years, whenever the Iraqi dinar came up, especially in mainstream banking circles in the US, the topic was usually ignored or brushed aside. Banks rarely gave any indication they were preparing for anything major. But the new information making the rounds suggests things might be different now. If these insider claims are accurate, Chase is shifting from a vague stance to a more active planning mode. That includes creating structured official-style protocols for handling dinar exchanges, which could signal they're anticipating some kind of future event that would require tighter processes. What's being described goes far beyond a small policy adjustment. The reports talk about a full operational reshaping. Internal memos are supposedly being shared with staff, and employees are said to be receiving training on updated procedures. These new workflows reportedly involve tiered exchange levels, stricter ID requirements, and an appointment-only system for anyone looking to make these transactions. The level of preparation described gives the impression that the bank expects a potentially high volume of requests and wants. To make sure the process stays organized, compliant, and secure, a major part of these alleged new rules is a tiered setup for foreign currency exchanges. According to what's being shared, Chase would separate clients by their account type or relationship with the bank. Regular customers fall into one tier, while premium and private banking clients fall into others. This would mean the amount someone can exchange and the service they get could differ depending on their tier. This type of structure helps the bank manage flow, prioritize higher value clients, and apply different levels of compliance depending on who's making the exchange. Going into the numbers, the reports lay out proposed limits for each tier. For Tier 1 regular everyday account holders, the daily exchange cap might be around the equivalent of 250,000 United States dollars. For Tier 2, which seems to cover premium or verified business accounts, the limit could be much higher, with some claims mentioning a possible $1 million USD equivalent per day. These numbers may still be early estimates, but they give a sense of how the bank may be planning to handle traffic and control the flow of money if something big happens. When it comes to the top-tier private banking clients, the structure reportedly changes a bit. Instead of being tied to a strict daily limit like the other tiers, these individuals might have more flexibility. But that flexibility comes with its own requirements. Larger transactions would have to go through an additional review process and get pre-approved by specialized internal teams. This ensures big exchanges still follow anti-money laundering rules and other regulations, helping protect both the bank and the broader financial system. On top of these tiered limits, Chase is supposedly rolling out much stronger verification procedures for any major foreign currency exchange. Regular identity checks wouldn't be enough anymore. Large transactions would activate secondary reviews, needing approval from currency compliance officers trained specifically for this type of situation. This extra layer of oversight is designed to keep each transaction transparent and fully trackable, giving the bank a clear audit trail. Another big reported change is the shift to an appointment-only model. The new policies allegedly say that once a revaluation event is underway, walk-ins won't be allowed for this currency category. That's a major difference from how people would normally expect to handle an exchange. It means individuals would need to schedule their transactions ahead of time through the bank's system. This approach would help avoid long lines, reduce stress on staff, and make sure compliance steps aren't rushed or overlooked. This appointment-based setup reportedly ties into the tier system too. Premium account holders may get priority access for booking. It could mean earlier time slots or being directed to specialized bankers who can process their exchanges faster. This shows the bank's focus on managing heavy demand efficiently, keeping everything compliant and making sure high-value clients receive the level of support they expect. Another point being discussed is the timing. These 2025 policy updates are said to align with Iraq's ongoing efforts to modernize its financial infrastructure. Iraq has been working to streamline its foreign exchange system, increase use of digital banking, and launch more unified electronic settlement processes. The fact that these changes overlap with reported U.S. banking adjustments encourages the idea that both sides may be preparing for something at the same time. Supporting this view are claims of unusual activity happening across multiple U.S. banks. Besides Chase, other institutions have been reported to be running internal audits and liquidity checks that aren't considered routine. Analysts pointing to these developments say that banks typically only take these steps when expecting some kind of significant currency event or large-scale shift. With these actions happening alongside Iraq's financial reforms, observers see this as more than coincidence. More details have also come out about the training employees are allegedly receiving. People from larger Chase branches have reportedly mentioned that staff are being trained specifically on handling large-value foreign currency transactions. This training reportedly includes how to verify notes, detect different levels of authenticity, and record serial numbers. All of this helps ensure the currency coming into the bank is legitimate and fully documented, which is essential for preventing fraud. Along with this training, the reports claim that new technology is being introduced to support the updated processes. AI-powered systems are supposedly being put in place to monitor large transactions in real time. This setup would automatically flag big exchanges like anything over a certain threshold, allowing compliance teams to track them instantly and ensure they meet all applicable regulations. These steps point toward a system designed for efficiency as well as security. When it comes to the numbers again, the provisional limits help show the broader strategy. The reported $250,000 daily limit for regular accounts and the $1 million limit for premium accounts create a structured MCHA way of managing traffic. Even if these numbers change later, they send the message that the bank wants to keep the process orderly. These limits are indeed just about managing workflow. They are also there to protect both the bank and customers from the risks that come with major financial events. Security appears to be another key focus of these reported policy changes. Each exchange, no matter how big or small, would have to pass multiple verification steps. This would include scanning notes with advanced tools, checking security features, and logging serial numbers. These steps are meant to stop counterfeit currency from entering the system and ensure everything stays legitimate during a potentially high-pressure time. For the highest value tiers, the security protocols might go even further. Some reports claim that clients might be required to sign NDAs or similar confidentiality agreements for large transactions. This isn't unusual in high-level finance, especially for private or structured exchanges. It's a way to protect both the clients and the market from unnecessary disruption and to keep sensitive transactions discreet. For anyone following these updates, the message is clear: preparation matters. Moving away from walk-ins and toward tiered limits, appointments, and extra documentation checks means you need to have everything in order. The reports stress making sure your ID, proof of purchase, and bank details are all current. The more organized you are, the smoother the experience will reportedly be when any official exchange event begins. 3 new policy terms are also being mentioned in these reports. The first is the digital conversion pathway, which supposedly allows clients to move their exchanged funds into a digital USD wallet or a linked Iraqi bank account instantly.